الحمد لله حمدا كثيرا كثيرا مباركا فيه والصلاة والسلام على رسول الله. أما بعد، السلام عليكم ورحمة الله وبركاته.
وعليكم السلام
Allah subhanahu wa ta'ala ordains opportunity has given to us, and also to be part of those that witness the beginning of Ramadan and the also witness the beginning of Ramadan. We pray Allah to by assisting this is Ramadan and we pray because we have a community of opportunities for our lives to participate in this very important economy. We want to discuss this morning is on the concept and practice of Takaful. We know within the next 1 hour, we're not going to go through the specific topic, but we'll try to specifically provide some understanding and also exist ourselves as Muslims as well as other Muslims to promote peace and humanity way of insurance, families, the also means people violence. So quickly, the outline of the discussion is going to look at the introduction, the principle of Islamic finance, the meaning of Takaful, and then the part of Takaful operation in Nigeria, when exactly did we start to have Takaful operation in Nigeria, then the underlying principles of Takaful. Then we also take on the memory lane, particularly the history and evolution of Takaful in the global world. And then we're also going to be looking at some of the fundamental characteristics of Takaful. And then the models of Takaful, or the Takaful model, the one that is being approved in Nigeria. We'll also be looking at this. And then we'll also be looking at the major differences between Takaful and then conventional insurance. And by way of trying to conclude, we shall also be looking at some of the conditions governing Takaful. Takaful is an aspect of Islamic finance, which is sometimes classified under ICF. ICF means Islamic Commercial Finance. And at other time or occasion, it comes under IFF, Islamic Social Finance. So it depends on the context in which we are looking at Takaful to be able to know where to place it, whether under the Islamic Commercial Finance or under the Islamic Social Finance. The global Takaful market size was projected, and it indeed came to pass, reached 36.6 billion US dollar as at the end of 2024. And the projection, is that by the year 2033, it is expected to reach 75.3 billion US dollar at a growth rate, cumulative average growth rate of 8.28%, that is approximately 8.3% during the year 2025, in which we are, and then towards the end of the year 2033. When we look at Takaful, the Nigerian market size, unfortunately, it's not only Nigeria, but globally. But let us contextualize it to Nigeria. The Nigerian market size is between 1 and 2%, with 34% contribution in annual growth rates for the past 4 years. So you can see that Takaful operation in Nigeria is still at the very, very low end, very, very low. And there is a potential for Takaful to grow beyond this particular, 1 or 2% it has recorded. When we look at the Takaful market, the market is experiencing robust growth driven by the rising global Muslim population. Nigeria is over 200 million, people in Nigeria population. That is a very big market in Africa. And when we look at it in the global market, also it's a very, very huge market. So if as of 2024 we have only reached 1.2 or between 1 and 2% of the Takaful market, it means the potentials and the opportunities, to bring Takaful to the doorstep of each household is very, very high. The market is also experiencing, apart from robust growth driven by the rising population of the Muslims globally, increased awareness of Islamic finance among consumers is also responsible for the growth. The introduction of supportive governmental policies is also one of them. The continual technological advancement taking place in the Islamic finance space has also contributed to the rising growth of Takaful globally, and we are also catching up with this trend. And then the economic development in Islamic countries is also one of the reasons for experiencing, a gradual growth in the Takaful markets. And we hope going forward, Nigeria also will join the list of countries that have actually, surpassed between 1 or 2% growth rates in terms of market size for Takaful. When we look at if you look at the screen now, we've been seeing the Takaful market. So the market focus to grow at a cumulative average growth rate of 8.3%, which I've mentioned. And in 2024, it was able to record 36.6 billion US dollar, while the projection is made between this year 2025 and the year 2033 to reach 75.3 billion US dollar. That is a lot when you look at what Takaful is bringing on board, apart from Islamic Bank or other financial institutions. Now let us quickly move to the rules and principles of Islamic finance. When we talk about we talk of fiqh muamalat, that is, we are talking of Islamic commercial transactions, or we relate some of the objective of this to Takaful. We discover that these are the following principles, of Islamic finance, which is also applicable to, Takaful, that is the subject of our conversation today. Number one is Atarabi, which is mutual consent in contracts. This is, also supported by a Quranic verse in Surah Al-Nisa, Quran chapter 4, verse 29. Where Allah says, Ya ayyuhalladhina amanu, Allah addresses the believers up to the end of that particular verse. Because of time, I will be skipping, quoting the Quranic verses to allow for enough time to touch on the points. Then the second one is al-wafa, fulfillment of contracts and conditions. Also, if you look at Quran chapter 5, Surah Al-Ma'idah, verse 1, as a reference. They will also talk of ihsan, provision of charity and best practice. Also, let us look at Quran chapter 57, Surah Al-Hadid, verse 11. The hifz, protection of wealth. We can also find reference in Quran chapter 4, Surah Al-Nisa, verse 5, and the qist, which is equitable distribution of wealth, among others. We can also find a reference in Quran chapter 59 and the verse 7 on this. And then, of course, the issue of promoting risk sharing. Takaful also promotes, Islamic finance also promotes risk sharing and data with Takaful. The part of the rules also includes prohibition of riba, which you refer to as usury or interest. You can also look at this reference in Quran chapter 2, verse 275. It also, the principle of Islamic finance also prohibits garar, uncertainty. Quran chapter 4, verse 29. It also prohibits himar and maisir, that is game of chance and gambling. You can also find a reference in Quran chapter 5 from verse 90 to 91. And then the prohibition of this fraud. We can also find an hadith of the Prophet sallallahu alaihi wasallam in Ahmad, in Muslim Imam Ahmad, hadith number 5113. And then the last but not the least is also the prohibition of zulm, which is injustice. We can also find a reference in Quran chapter 4, verse 29. Then let us also look at some of the basic instruments of Islamic finance. I will just mention just briefly. Number one is Muraba. Muraba is a contract that is talking about cost plus or a markup. And then we also have Mudaraba, which is a profit sharing, contract. Then the third one is Ijara, which means leasing or lease. We also have Musharaka, which is partnership. Then we have the Salah, which means forward sale. Then we have Istisna, manufacturing sale. We also have Wakala, which is talking about agency. And then we also have Kafala. Kafala is talking about guarantee or the ability to take over. So these are some, not all, instruments that can be used in Islamic finance, whether it is in the Islamic banking, or it is in the capital market, or it is equally in the Takaful market, depending on what particular contracts one intends to, engage in. Now, let us quickly look at some of the meanings of Takaful. So the term Takaful is a noun which is derived from the roots of the word kafala, which means guarantee or responsibility. While Takaful, whose chief characteristic is al-musharaka, means sharing. Thus, the word Takaful stands for shared responsibility, shared guarantee, collective assurance, and mutual undertakings. Technically, from the economic point of view, Takaful means a mutual guarantee or assurance based on the principles of al-aqd, which is contract provided by a group of people living in the same society against a well-defined risk or catastrophe affecting one's life, property, or any possessions. This system is cutting off some of my presentation. So like I was saying, the term The term Takafu is a noun. I already have explained this. In other words, Takafu is referred to as Islamic insurance. The term Takafu, so if you look at the definition given to Takafu by IOFI, that is the Accounting and Auditing Organization for Islamic Financial Institutions, it defines Takafu as a process of agreement among a group of persons to handle the injuries resulting from specific risks to which all of them are vulnerable. Similarly, the National Insurance Commission of Nigeria, called NICOM, that is the body, that is the regulator for insurance business in Nigeria. And it is the same body that is responsible for regulating Takaful operation in Nigeria. NICOM defines Takaful insurance as a form of insurance that is compatible with Sharia provisions based on the principles of Tabarru, which means donation or contribution, and Ta'awun, cooperation. Now let us also look at the IFSB's definition of Takaful. IFSB means Islamic Financial Services Board. It also defines Takaful as a mutual guarantee in return for the commitment to donate an amount in the form of a specified contribution to the participant risk fund, whereby a group of participants agree among themselves to support one another jointly for the losses arising from specific risks. Now let us also look at the definition of Takaful by the International Islamic Fiqh Academy, IIFA. It says Takaful can be defined as a cooperative insurance. Or cooperative insurance is the process in which a group of people who face risks agree that each of them contribute a specific amount based on cooperation to a non-profit fund that is to be used for compensating any one of them for the harms he will encounter when the risk in question materializes as per signed contracts and adopted regulatory legislations. The scale of insurance risk underwriting, is too great for one insurer to carry safely. Now I'm moving away from Takaful now to look at Takaful, because there's no way you can practice Takaful without having Takaful put in place. And I will explain briefly Takaful. So because of the scale of insurance risks underwritten by Takaful operator is usually too great for one insurer, a Takaful operator, to cover. That is why the need for a Takaful operations to also work side by side with Takaful operators. In these circumstances, companies use reinsurance, which we call Takaful, to mitigate their own risk exposure. When Takaful insurance operators insure a risk with another company, it is called Takaful, that is reinsurance, which allows the insurance industry to spread its losses, lessening the impact of claims on any one company. NICOM's guideline of the year 2022 as amended mandates all Takaful insurance operators to place all its Takaful insurance with Sharia compliant insurance or Takaful companies providing Takaful insurance. Where such arrangements are not available, the guideline also went further to say that the Takaful operators ACE, the ACE means the advisory committee of experts, we are talking of the Sharia experts, must validate and approve the decision of the management to patronize a conventional insurance company. It is important that we underline this, because in Nigeria today we have very few Takaful operators. And one of the challenges we're also facing is that we have a very, very limited Takaful companies, if at all we have. And there's no way a Takaful operator can operate successfully without also registering itself with a Takaful company, with reinsurance. So the guideline of NICOM, particularly section 6.12 of the 2022 guideline as amended, make this provision that where a Takaful operator cannot find a Sharia compliant reinsurance, then they can go with a non-Sharia reinsurance company based on the validation and approval of the ACE, that is the committee of the Sharia expert of that Takaful operator. So the Takaful operator cannot just go and do the Takaful or reinsurance with any non-Sharia compliant reinsurance company without first obtaining the approval of their Sharia committee or Sharia board, which is called the ACE, Advisory Committee of Experts. Now, let us move to another section to look at the back of Takaful operations in Nigeria. In the year 2013, NICOM, that is the National Insurance Commission of Nigeria, launched the Takaful Insurance Operational Guidelines, pursuant to Section 7 of the NICOM Act of 1997. So in the year 2022, NICOM issued another guideline, which came into effect on the 1st October 2022 under the National Insurance Commission Act 1997 and the Insurance Act of the year 2003. The NICOM Act of 1997 empowered the Commission, that is, I'm talking of NICOM, to register and issue operating licenses to the current Takaful operators in Nigeria. And these operators are as follows. African Alliance Insurance Company. It started its Takaful window in the year 2004, not as a full-fledged Takaful operator. But the African Alliance Insurance was using a window. So it was the first insurance company to start using Takaful window. In the year 2016, New Takaful Insurance Limited also was given license, and it started its operation in August 2016. That same year, Jais Takaful Insurance Limited, which I'm currently also serving on the board as a non-executive director, also started its operation in August 2016. I think New Takaful started about either 3 months before Jais, Then followed by Hilal Takaful Limited. Hilal Takaful Limited was formerly referred to as Cornerstone Takaful Window. It was a subsidiary of Cornerstone Insurance. So it had a window also like the African Alliance. So it also started its own Takaful window in the year 2010, until when it's now got its full license to start on its own as Hilal Takaful, not as a window. Then also followed was Salam Takaful Insurance Limited, which also got its license to operate in February 2020. And then followed by Crown Takaful Insurance Limited, which also got its license by the year February 2022. And then the youngest among all of them is Al-Wafa Takaful Insurance, which also got its AIP approval in principle I think in the year 2024. So in Nigeria today, these are the licensed Takaful operators, licensed by NICO, which is the regulator in the Takaful industry. Now, let us look at some of the terminologies, because as I'll be going into my conversation, I'll be using some terminologies, so I need to break them down so that you can understand what those terminologies refers to. In Takaful insurance, we don't call a policy holder somebody who has paid a premium policy holder. In Takaful operation, we call such people, participants. We call them participants, not policy holder. They are called participants. Then the company, that is the insurer, unlike in the conventional insurance, you call them insurer. But in Takaful, we call them Takaful operator. So if you are hearing Takaful operator, it is the same thing as in a conventional insurance, you call them insurer or insurance company. But in Takaful, we call them Takaful operator. Then we also have what we call participant risk funds in Takaful insurance. The participant risk funds is the policyholder's account. So in Takaful, we call them participant risk funds. Then we also have the shareholders risk funds, which is the operator's account. Then we also have participant investment funds. That is the investment fund of the policyholder in the Takaful company. Then we call them participant investment funds. Then we also have what we call surplus distribution. In Takaful operation, this is the unique selling points, which is not something you can find in the conventional insurance. In the surplus distribution refers to the profit sharing among participants in the Takaful operation. At the end of the year, when the Takaful operator has actually finished audited the account, for a financial year, and they are able to make a profit in the participants, risk fund, that profit, after settling all the claims and the net balance shows a profit in the Takaful operation, that profit is what is being distributed and being referred to as surplus distribution. So you give it back to the participants who contributed who made their contribution, which is the policy. You give them back the surplus based on each of the class of the policy they subscribe to. Then we also have what we call wakil. You can't find a wakil in any insurance system other than in Takaful. The wakil in a wakala contract, if you remember, I mentioned some of the instruments of Islamic finance. Wakala is one of them. So in a wakala contract, a representative, an agent, who acts on behalf of the principal or the investor is called the wakil. And then we also have the advisory committee of experts, which is the ACE. Then we also have the mudarib. The mudarib is referred to as the entrepreneurship or the experts in mudaraba contracts. I've already explained what mudaraba contract means. It is profit sharing, contract in Islamic finance. Then we have what we also refer to as Rabbul Mal. Rabbul Mal means the owner of the capital or the investor in a mudaraba contract. Then we also have what is being referred to as Ta'awun. It's a principle of mutual assistance. Then we have Tabarru. Tabarru means a contract to provide somebody any goods or service without compensation in return or without any obligation or compulsion. Summarily, Tabarru means donation. So this is very unique with Takaful. You can't find this in the conventional insurance. So policyholder in Takaful call participants. Anytime they take up a policy, that policy they are taking up, what they pay out, part of it is referred to as Tabarru. You are making a donation to a central pool, so that for any member of that pool, in case of any unforeseen circumstances or a peril, it is from that pool they draw from that contribution to make sure that they settle whoever has a challenge. So that is what we refer to as Tabarru. Then we also have, again, I already have explained this, which is the wakala. So wakala is a contract, of agency in which one party appoints another party to perform a certain task on its behalf, usually for payment of a fee or a commission. So these are some of the terminologies that I need to explain for clarity. Then let us quickly look at some of the underlying principles of Takaful. So we have what we call mutual guarantee. All policy holders, that is the participants, agree for the pooled funds to be used for assistance in specified circumstances of loss, just like I have just explained. That is referred to as mutual guarantee. Then the second underlying principle of Takaful is that every participant, that is a policy holder, pays a part of the contribution, which is the premium, as a donation to help those that need assistance. Then thirdly also, ownership of the funds, that is that premium which we call contribution that a participant makes to a Takaful operator. The participants are the main owners of the Takaful insurance fund. This is also another unique feature of Takaful. In the conventional insurance, policyholder are not the owner of the company. In conventional insurance, you as a policyholder, you are not the owner of the company. You are just a customer. But in Takaful insurance, the policyholder contribute and call participants. That their contribution makes them the owner of the Takaful operator. They are the owner of the Takaful. They are the king. So the insurer is just a wakil. It's just a representative, helping them to manage their funds which they have contributed. So this is a very unique feature of Takaful operation, unlike the conventional insurance that we all are used to. Then another underlying principle of Takaful is that losses are divided and liabilities are spread according to the community pooling system. Each participant makes, when they make their contribution, which is the policy and which is the premium, into the central pool, part of it goes as contribution. It is the collection of all the contributions from all the participants that the Takaful operator uses to mitigate any losses that any member of that pool suffers for that particular year that policy was subscribed for. Now, again, uncertainty is eliminated in respect of contribution and compensation in Takaful operation. It does not seek to derive advantage at the cost of others, unlike the conventional insurance. Winner takes all. That is the principle. And most of you, if not all of you, who have been patronizing conventional insurance, as Muslims, brother, if after today's lecture, you still continue to patronize the conventional insurance, then you are doing more damage to the Takaful operation in Nigeria. Because before Allah, you will not have any excuse to come before Allah Yawm al-Qiyamah and say, oh Allah, this is the reason why, because there was no Takaful, in Nigeria. That was why I was patronizing the conventional insurance. Now, in Nigeria, we have alternative Islamic banking. We have the Islamic bank, which are non-interest bank. So any Muslim who puts a very great amount of his money in the conventional at the disadvantage of the non-interest bank is not doing the Islamic banking, it's not giving the required support to make them to grow. The same thing with Takaful. Because the conventional insurance usually seek out to take advantage of the policy holders. They will tell you, the moment you just sign a policy and you make your payment, which is the premium, their prayer is that you never suffer any loss. That's their prayer. You never suffer any loss. So that at the end of the year, that money is gone. It's 100%. It belongs to the shareholder of the insurance company. But in Takaful, the underlying principle is not to take advantage of the participants. The underlying principle is how can we support people in case of emergency. That is why the principle of ta'awun and tabarru, can only be found in Takaful, operations. So management of the Takaful insurance fund, the management role is performed by the Takaful insurance operator in consonance with international best practices. When we talk about investment conditions, any investment activity performed using the participants' contribution must be in line with the governing principles of Takaful insurance, i.e., avoiding, investment in select unlawful industries that are deemed harmful to society and avoiding interests. Now, let us move quickly to look at the history and the developmental stages of the evolution of Takaful globally. Takaful operation started before the time of the Prophet Muhammad sallallahu alaihi wasallam. Gradually, it developed until the beginning of the 19th century, when a Hanafi lawyer, Ibn Abidin, who between the year 1784 and 1836 became the first Islamic scholar as a lawyer who came up with the meaning and the concept and legal entity of insurance contracts. So, amongst the developmental stages, the number one is that the practices of the doctrine of Al-Akira among the Asian and Arab tribes as a tribal custom. That was the beginning of Takaful operation. It was a custom among the tribes of the Arab that if any member of the Arab tribe was killed by a member of another different tribe, the heir of the victim will be paid with an amount of blood money called diya as a compensation by close relatives of the killer. Those close relatives of the killer were addressed as Akila in Arab terminology, who were supposed to pay the blood money on behalf of the killer. So the word Akila means asoba, which denotes paternal relatives of the killer. Therefore, the central idea of the doctrine of Akila was practiced among the Asian Arab tribes, as everybody in those tribes used to be ready to make monetary contributions on behalf of the killer to compensate the heir of the victim. That is how Takaful first started. So the second stage was the practices of the Prophet sallallahu alaihi wasallam. The development of insurance practices during the time of the Prophet sallallahu alaihi wasallam could be discovered from two situations. Number one, the acceptance of the ancient Arab practices of Akila. The Prophet himself, sallallahu alaihi wasallam, said or had accepted the concept of Akila as practiced by the ancient Arab tribes. This could well be justified from the numerous verdicts or sunnah of the Prophet sallallahu alaihi wasallam. In one of the disputes, the Prophet sallallahu alaihi wasallam decided as follows. As narrated by Abu Hurairah radiallahu anhu, he said that once two women from Uzaili clashed when one of them hit the other with a stone, which killed her and the baby in the victim's womb. The heirs of the victim brought an action to the court of the Holy Prophet sallallahu alaihi wasallam, who gave a verdict that the compensation for the fetus to be a male or a female slave, while the compensation for the killed woman is a blood money diya to be paid by the Akila, that is the relatives of the father's side of the killer. So we can see that these are the trends of how Takaful started evolving. The second situation was the relevant legislation passed in the first constitution of Medina had included and introduced in it a kind of social insurance which appeared into three modules. Number one, through the practice of diya of blood money was supposed to be paid mutually by the Akila, the close relatives of the killer, to the heir of the deceased, that is the victim, in order to rescue the killer from legal burden. The Prophet sallallahu alaihi wasallam ruled it out at Article 3 of the above said constitution of Medina. You know, when the Prophet got to Medina, when he did the Hijrah, you know, he established the first global constitution from which the world today also adapted. Even before United Nations was given birth to, that constitution was the first constitution in the world. So part of the articles of the constitution, we discovered that the principle and the practice of Takaful actually had been incorporated through this principle or doctrine of Akila. The immigrants among the Quraysh, in that Article 3, it says, the immigrants among Quraysh shall be responsible for their work and shall pay their blood money in mutual collaboration. Similarly, Banu Auf, Banu Harith, and other groups living in Medina at that time were also obliged to pay blood money in mutual collaboration, relying on the doctrine of Akila as ruled out in the constitution. Number two, through the payment of fidya, ransom, there was another provision in the first constitution concerning rescuing the life of the prisoners, which stated that should there be any person being made a prisoner of war by any enemy, the Akila of the prisoner shall contribute a ransom to be paid to the enemy in order to enable the captive to be freed. Such contribution was another form of social insurance. The Prophet sallallahu alaihi wasallam mentioned to the effect that the immigrant among the Quraysh shall be responsible for releasing the prisoner by way of paying their ransom, so that the mutual collaboration among the believers be in accordance with the principle of goodness and justice. Similarly, the above ruling was also applicable to other groups like Banu Harith, Banu Najjar, Banu Jusham, and others living in the Medina society at that time. Then thirdly, by way of other forms of social insurance included in the post-constitution, which mentioned that the society shall be responsible to establish a joint venture with a mutual understanding towards providing necessary aids for the needy, for those who are ill, and then for the poor. The third stage was the practice of the companions, radiallahu anhu ajma'in. Further development of the practice of insurance-based transactions during the reign of the second Khalifa, Umar bin Khattab radiallahu anhu. During the period, the doctrine of Akila had even been encouraged by the government to be practiced by the people. Umar bin Khattab radiallahu anhu commanded that a diwan, that is a chamber, an institution of mujahideen be established in various districts, and those whose names were recorded and contained in the Diwan owed each other a mutual cooperation to sincerely contribute the blood money for manslaughter committed by one from their own tribe. The doctrine of Akila was further deepened by Umar bin Khattab radiallahu anhu. Then the fifth stage, development in the 14th to the 17th century. During the period of the 14th to 17th century, a Sufi order of the Kaziruniya was very active, especially in port cities in Malabar and in China. You can see how Islam actually has traversed the world. We are talking of between 14th to the 17th century. This order served as a kind of marine travel insurance company. It had been associated with the tomb of Abu Ishaq Ibrahim ibn Shahariya between 963 and 1035 CE, whose blessings were considered as a protection against peril, that is, against any catastrophe during the sea voyage. Then, the sixth developmental stage is the development in the 19th century. During the period of the 19th century, Ibn Abidin, that's Sudanese lawyer, a Hanafi lawyer, was the first person to discuss about the idea of insurance and its legal entity. He was also the first person to discover insurance in the context of the legal constitution, being no longer a customary practice. Ibn Abidin's opinion on insurance practice, being a legal institution, served as an eye-opener to many Muslims who did not accept the legality of insurance practice, that is, the legality of the conventional insurance as we have it today. And it had prompted other Muslims to accept the idea of involvement in insurance business. And then, the stage in which we are today, which is the development in the 20th century. In the period of 20th century, a well-known Islamic jurist by name Muhammad Abdul issued two fatwas which mentioned that one, an insurance transaction is like the transaction of al-mudaraba financing technique, which is profit-sharing contract. Two, while the other was that a transaction which is similar to endowment or life insurance are legal. You see, in Nigeria today, NICOM, which is the regulator, has not licensed any Takaful insurance to adopt the fourth model of Takaful. The fourth model of Takaful, though I'm not going to discuss it, is called Waqfu Takaful. In some other countries, they are using it, but our regulator here only licensed three models for us, and I will discuss them in details later. Now let us quickly come to the next stage, looking at the fundamental characteristics of Takaful. Number one is ikhlas, sincerity. Every transaction and dealing should always be done with sincerity and pure intention in order to achieve desired result from Allah subhanahu wa ta'ala. We can look at Quran chapter 98 verse 5, Surah Al-Bayyinat, without quoting that verse because of time. Also, look at the hadith of the Prophet sallallahu alaihi wasallam, which is a very popular hadith in Nawami's collection, hadith number 1, that talks about Namal Amalu bin Niyat. Moreover, the parties to the insurance contract must have the sincerity of not to take advantage of each other, but to be bound by that transaction based on the principle of mutual cooperation, which is ta'awun, solidarity, tadamun, and ukuwa, brotherhood, towards rescuing one from unexpected losses and damages. This is because Allah subhanahu wa ta'ala never look at any material gains, but at the sincerity of the hearts of the operators. Number two of the fundamental characteristics of Takaful is that it has absolute Sharia principles. An insurance business in the eyes of Islamic discipline will not be valid should any of its aspects contravene any Sharia principle. The Takaful guidelines rules out that a Sharia-based insurance is enforceable if its aims and operations do not involve any element which is not approved by the Sharia. Number 3 is moral attributes. An insurance contract and practice must also conform with moral sanctions, such as the principle of ubarime fidei. What is ubarime fidei? It is called the utmost good faith. It is a Latin word, means utmost good faith. In an Islamic insurance contract, the parties should observe the principles of utmost good faith, honesty, disclosure, and truthfulness. I will leave that judgment for us, those of us who patronize conventional insurance, whether indeed this principle is being upheld. You know, the principle of utmost good faith, honesty, disclosure, and truthfulness. You and I will know clearly. For those who have been patronizing the conventional insurance, we know clearly where our submission will be. This principle, with regards to Takaful insurance, could be justified by the following verses of the Quran. Quran chapter 4, verse 29. Where it says, do not misappropriate one another's work unjustly, but only in lawful business by mutual consent. Illa an takuna tijaratan an tarat. Right? Then the second one is the parties involved in an insurance contract should not be greedy in taking advantage of one another. They should purify their purposes and aims based on the principle of mutual cooperation in protecting one from an unexpected disaster or loss. This is in line with divine sanction in Quran chapter 5 verse 2, Surah Al-Ma'idah, where Allah says, وَتَعَوَّنُوا عَلَى الْبِرِّ وَالتَّقْوَى وَلَا تَعَوَّنُوا عَلَى الْإِثْمِ وَالْعُدْوَانِ. We cooperate in righteousness and in piety. Then the fourth element is the element of insurance contract. The following elements should be available in the Sharia-based insurance contract. 1. The parties to the contract must have legal capacity. 2. The availability of insurable interest must be there. 3. And there must be indemnity clause. The Takaful operator is unilaterally bound to compensate the participant for the loss of the agreed subject matter. 4. The payments of contribution by the participant as a consideration to the contract. And 5th, the presence of mutual consent by both parties must also be very visible. This number 6 is that an offer and an acceptance to be expressed in a formal agreement between the insurer and then the insured, that is between the Takaful operator and then the participant, in which the terms and conditions being put are subject to the doctrine of ubarime fidei, that is utmost good faith, and of course in compliance with the Sharia principle. And number 7 is that specification of period for the agreed policies, which is to be contained in the agreement. Usually its insurance policy is for a year, but there are certain other policies that can be taken for 2 years, for 3 years, for 5 years in Takaful. Then number 5 fundamental characteristics of Takaful is that a contract of insurance should be operated based on the principle of non-interest, that is riba, and based on the principle of al-mudaraba financing technique, whereby both parties will enjoy the share of profits and dividends made over the paid contributions and company's policies. Now let us move to look at the Takaful models that NICOM approved for all the Takaful operators in Nigeria. Currently in Nigeria, there are 3 operating models approved by NICOM. Number 1, NICOM approved that any Takaful operator in Nigeria can adopt Takaful insurance based on Mudaraba contracts, purely Mudaraba contract, which means profit and loss sharing contracts. In this model, the Takaful insurance operator holds the role of the Mudarib. The Takaful operator plays the role of the Mudarib. The Mudarib is the expert, is the entrepreneur partner. and the Takaful insurance participant, that is the policy holder, are the Rabbul Mal, they are the owner of the capital. The key aspect of the model are set out in the contract and shall include: number one, Takaful insurance operator manages investments and underwriting activities. That is number one. Number two, the percentage share of investments, gains, and operating surplus for the Takaful operator must also be clearly stated. Number three, financial losses to be borne by Takaful insurance participant. If you are using a Mudaraba contract, either in Takaful or in Islamic bank, or even in the capital market, the principle is that it is, if there is a financial loss, it is the Rabbul Mal that will suffer the loss. It is the Rabbul Mal that will suffer the loss, except where the Rabbul Mal can prove beyond any reasonable doubt that that loss was caused by the negligence of the Mudarib. The Mudarib is the entrepreneur partner, the one who is managing it, who is running it. If the Rabbul Mal can prove that what we suffer a loss was because of negligence or because of lack of capacity on the part of the Mudarib, then the Mudarib has to compensate the Rabbul Mal for that loss. Then if everything had been done in accordance with what is expected of the Mudarib and there is a loss, it is the Rabbul Mal that will suffer the financial loss. Why the Mudarib will suffer his expertise, will suffer his energy, will suffer the time he has invested in that particular the business. So both of them have a share in the loss. Right? So that is. Then let us now look at how the Mudaraba model works. The Mudaraba contract will be signed between the Takaful operator and the participant, which will determine the pre-agreed profit sharing ratio. Two, then a contribution will be made. When we say contribution, don't forget I'm talking of a premium. Will be made by participants to the Takaful fund through the Tabaru contract. Each time a participant make a payment of a premium, part of that premium, there is what is called Tabaru, which is going to be set aside by the Takaful operator. The Takaful operator invests the fund in a Sharia compliant investment. 4. Each party shares the investment profit according to the pre-agreed ratio. The share of the participant will be transferred into the Takaful fund. And then 5. The Takaful fund will deduct the claims, the reserves, and then the Takaful, and then the surplus belongs either 100% to the participant if you are looking at a pure Mudaraba model, or is shared between the Takaful operator if you are looking at a modified Mudaraba model. For those of you who are watching this presentation, you will see on the screen, I have a diagram on the screen showing us how the Mudaraba model is being exemplified. I have given the narrative, but the graph here also explain how it works. I won't take much of your time on this. The slide will be shared by those who are interested. Then the second model is called the Wakala contracts. The Takaful insurance based on Wakala agency contracts. In this model, the Takaful insurance operator holds the role of the Wakil, the agent, acting on behalf of the Takaful insurance participants in return for a fee. The key aspects of the model are set out in the contract and will include the following. 1. The Takaful insurance operator manages investments and underwriting activities. 2. Takaful insurance operator, for performing this service, will receive a Wakala agency fee that is set out in the contract. 3. The Takaful insurance operator is also permitted to a performance-related fee as per the contract. In this model, a contribution is paid by the Takaful participant known as Tabarru to the Takaful fund. That is, you as the policy holder, when you pay your premium, part of it goes to the Takaful fund as a donation called Tabarru. 2, Takaful participant appoints and employs the Takaful operator as an agent or a wakil. 3, the agent will deduct the wakala fee from the contribution, that is from the premium paid. This fee will be an upfront charge and go to the shareholders and agents in addition to the fee for administering the fund. 4, the amount of contribution after deducting the wakala fees will now go to the Takaful fund. 5, the Takaful fund will be invested by the agents in a Sharia compliant investment. 6, the profits from the investment will be added to the Takaful fund. Then the claims, reserves, and the Takaful will now be subtracted from that fund. 7, the whole surplus in this model must be distributed back to the policy holders called the participants. And finally, in case of underwriting deficit, in case when you have done your underwriting and there is a deficit, the Takaful operator commits to provide the fund through Qard Hasan, that is an interest-free benevolent loan from its shareholders fund to cover the shortage. Moreover, when the Takaful fund achieves surplus later, the loan the Takaful operator earlier provided to the fund will be fully refunded. So the wakala fee includes both agency and administration charges. Again, on my screen, I have a diagram also that illustrates how this narrative works when a Takaful operator wants to adopt just a wakala model for its operation. Then let us go to the third model, which is what all the Takaful operators are using in Nigeria. The third model is the one they are using. It's an hybrid. It's a combination of the first model, then the second model, which is Wakala Mudaraba model. That is what most of them are using, because that is what pays the Takaful operators. That is what makes them to be able to at least sustain their operation, also earn some element of the surplus of profit for the continuity of the organization. Now, looking at the third model, the Takaful insurance based on hybrid Wakala Mudaraba, that is agency profit sharing contract. In this model, the Wakala agency contract is in place between the Takaful insurance operator and the Takaful insurance participant, that is the policy holders, for the management of underwriting activities. 2, a Mudaraba profit sharing contract is between the Takaful insurance operator and then the Takaful insurance participant for the investment activities. So the hybrid model, Wakala Mudaraba, is today the most used in Takaful family companies. The Wakala contract is used for underwriting, while the Mudaraba contract is used for Takaful fund investments. So in its operation, this model works as follows. 1, the participant contributes to the Takaful fund through Tabarru, which is the Tabarru contract. Number 2, the participant appoints the Takaful operator as an agent and a mudarib. 3, the Takaful operator will deduct upfront when the policy holder, the participant, you pay your premium, you make your contribution. So the mudarib, the operator, upfront, they deduct, the wakala fee, which is their own day, the fee for managing, your investment, and then the fee for also indemnifying you in case you have any, any liability or you have any peril. They take their own wakala fee upfront. It is approved by NICOM. So it is not as if individual companies do this on their own caprices, but they are following regulation. So the remaining amount will now be invested by the Modori in a Sharia compliant investment. The profit of the investment will be divided between the Takaful fund and then the Takaful operator or Modori based on the pre-agreed ratios. And then claims reserved and the Takaful will be deducted from the Takaful fund and the surplus goes to the participants. You see, this is the unique selling point of Takaful. At the end of the financial year, let me simplify this. The most common one is, let us take, motor Takaful cover, for example. Maybe you have a brand new vehicle. Maybe, let us say, Toyota Jeep, the latest, maybe 2025 model. Maybe the price of this may be in the range of maybe about 4 to 600 million. You now want to do comprehensive insurance and then you insure it. If at the end of the financial year, from March this year to March next year, you did not have any accident, nothing happened. In the conventional insurance, when you insure that one and you don't have any catastrophe, the money you paid, that premium, 100% goes to the shareholder, the owner of the insurance company. So you can imagine if you are paying this for the past 5 years, it is as if you are just making voluntary donation to an insurance company because you don't have any claim, because there was no any peril, no any catastrophe. But in Takaful, you will not just be making contribution, but they will return surplus they have made from the pool of each participant. When they net whatever claims others have, they remove, amount of money for reserves. Then they also remove for Takaful insurance. The net balance is called surplus. They now redistribute this surplus to all the participants based on the class of the insurance you cover. So if, for example, in the insurance cover, motor insurance is the highest. So based on the ratio and percentage of that surplus, the highest number of that surplus will go for motor cover. If those people who also did marine insurance did not have any claim, based on the totality of the participants and the ratio of the premium paid, they also net out what goes for participants for marine insurance. The good thing is that at least certain amount of money will come back to you. That amount of money is called surplus, which must be given back to you. This is what conventional insurance does not have. In conventional insurance, it's winner takes all. But in Takaful, it is a win-win situation. They will give you back out of the surplus because it is your money. While the organization will also take some because they also manage that money for you. They also invested that money for you. And the profit they got from the investment based on pre-agreed ratio, they share it with you. So at the end of the day, you are better off than when you go with a conventional insurance. Then, like I said, claims, reserve, and the Takaful will be deducted from the Takaful fund, and then the surplus goes to the participant or share with the Takaful operator. Again, I have a diagram here which also illustrates how this Takaful third model, the Wakala Mudoraba model, how it works. Now, let us look at some of the products and services of the Takaful operators in Nigeria. I've just mentioned to us that currently we have about 6 Takaful operators licensed by NICOM. Full Takaful licensed by NICOM. And I look at all these Takaful operators. All of them are giving out almost similar products. They only gave it different names. They only gave it different names, but it's a similar product they are giving out. It's just like you have your telephone providers, MTN.
Glo, Airtel, Nine Mobile, and their likes. It's the same service they also render. If somebody says MTN is the best, like network, they say, look, Glo is the best because you are using Glo. This one say Airtel is the best. If somebody who has all this um, service provider has their line, is in a better position to tell which one is the best. They are all providing the same service. It's the same thing with Takaful operators. So some of the services they give out, and let me also mention that all these Takaful operators, they are composite Takaful operators, composite insurance companies. When I say composite, I mean they also provide all the services conventional insurance also provides. In the conventional insurance, they provide life insurance. In the Takaful also they provide life insurance, but we call it family Takaful. In the conventional insurance, they provide general Takaful. In the Takaful, insurance, we also call it general family Takaful. Right? And then in Takaful, we also have what we call agreed Takaful. So all these Takaful operators in Nigeria licensed by NICOM, they are all composite Takaful operators. And some of the services, if not all, that they provide are as follows. Let us look at family Takaful. Some of them, they call it Comfort Family Plan. Some call it Comfort Plus. Some call it Flexi Family Takaful. Some call it Progress Family Takaful. Some call it term assurance. They gave it different names just to kind of attract participants. All these are under family Takaful. All these mentioned the family Takaful. At the end of a year, a participant, a policy holder, will be giving back any surplus, if there are surplus in this particular, policy he or she has subscribed to. If there are no surplus, which means most of them, or few of them, have made claims. And if you as a participant, for example, you have a policy, let us say you have a complex family Takaful policy in a year, or under general Takaful, you have done a motor coverage Takaful, and then in that year you had an accident, and then your Takaful operator indemnify you automatically. When they are sharing surplus, you will not be part of the people that will share from that surplus. Why? It's because you have been indemnified. From the amount, from the pool of resources they are supposed to share surplus to everybody, you are taking your own chunk of the share because you have a claim. So you will be excluded from those that will share from the surplus. While those who did not have any claim are those that will not be given surplus in order to uphold the principle of equity and fairness. So some also, under the family Takaful, they have what we call mortgage Takaful plan. Some even have group family Takaful plan, credit Takaful plan. Some also have Hajj and Umrah family Takaful plan. Some have education Takaful cover, terms assurance, etc., etc. All under family Takaful. Under general Takaful, all of them, they also have burglary, machinery breakdown cover, professional indemnity, fidelity, guarantee, etc., etc. They also have individual and group, personal accident, employer liability, professional liability, good in transit cover. They also have motor Takaful cover, marine cover. They also have marine cargo, fire and special peril, marine hull, Takaful cover, erection, oil rigs, among others. Like I said, it's just the name each of them gives to these things to make it attractive. On the underlying coverage is that it does the same, policy coverage for all these things we've mentioned in case of any accident. Under the agreed Takaful, some of the products they have include agricultural Takaful cover, combined agricultural produce and investment Takaful, crops Takaful cover. They also have livestock, domestic animals, for those who are doing fishery or fish farming, or those who are also into poultry under agreed Takaful, they can have a cover, and it is good to go for all of them. So all the services they are providing, which conventional insurance are providing, I can assure you that all these Takaful operators I've mentioned, that are composite Takaful operators, they can also provide those services for you. And all the services are Sharia compliant. Now, let us now look at the major fundamental differences between conventional insurance and Takaful insurance. Maybe this will shed more light and then touch our hearts for those of us who have not started patronizing Sharia compliant Takaful insurance. Number one, let us look at here under these differences. We are going to be looking at the differences based on these following criteria: the themes, then the conventional insurance, then the Takaful insurance. Under theme number one, let us look at the concepts of conventional insurance and the concept of Takaful. The concept in conventional insurance is based on the concept of bottom-ring. Bottom-ring is a concept that is adopted by the IAIS, the International Association of Insurance Supervisors, on the principle of indemnifying ship owners that goes on the IC voyage coverage. But Takaful concept was based on the doctrine of Aquila, which has been explained earlier on. The second thing is the principle of conventional insurance. The contract of bottom-ring was founded on interest, because under this bottom-ring concepts, those who are owners of ships, when they are going on high sea, they have to take loan and then pay the interest on it for any eventuality. Should the ship spoil on the IC, or should the ship get damaged on the IC, or should some of the goods on the ship get damaged, then the loan which they have acquired, with the interest they are paying, they will use that loan to indemnify those losses they have suffered. That is the concept of bottom-ring, which is based on interest. But the principle of Takaful was based on the concept of Aquila, which was practiced based on cooperation, ta'awun, among the tribes of the Arabs in Medina at that time. These are two fundamental differences. Number three is when we look at the contractual relationship. With regards to conventional insurance, contractual relationships is interest-based contracts. But Takaful is Sharia compliant Takaful model. Two, under the same contractual relationship, the conventional insurance is based on a bilateral contract. But under the Takaful, it is multilateral contracts, because there are four major actors in Takaful operation. We have the insurer, we have the insurer, then we have the operators, and then we have the participants. Then under the fourth thing, what is the motive for conventional insurance and what is the motive for Takaful? The motive for conventional insurance is profit-based. Halas, it's profit-based. If need be, they will take advantage of the insurer. They will take advantage of the policy holders. But the motive under Takaful is mutual help, ta'awun, and tabarru, donation. You that subscribe to Takaful insurance, you are voluntarily subscribing to the principle that Yes, I'm paying my premium. Having it in my mind also that I'm making a donation. That part of this premium should be set aside as donation for other people who are also, coming to make contribution in the pool for any eventualities. And when you make a donation, you don't go back to collect your donation. Because the donation you have made is a money you are giving out without you expecting any reward, from the donation you have made to the recipient. That's the fourth difference. The fifth difference is, let us look at payments. In conventional insurance, like we said, the payment we make for policy is called premium. And this premium belongs to the insurance company. Even though you are the one coming to do what? To make the premium, to make the payment. The moment you pay your premium to insurance company, you are no longer the owner of that money again. No matter what, you are not the owner again. The money belongs to the insurance company. It belongs to the shareholders. But in Takaful, when you pay your premium, which you call your contribution, that contribution belongs to the participant. It belongs to you and other people who have similar policy in the operators in the company. It belongs to the participant and then the Takaful operator, depending on the Takaful model adopted. You can see the difference. So you, the policy holder in Takaful, you are the real owner of the Takaful company, unlike in the conventional insurance. So the money you are paying to a Takaful operator belongs to you. Even the Takaful operator cannot touch the money, because part of the way they work is that they must have a separate account where that money must go into, and they can't dip their hand in that money. Unlike in the conventional insurance, the moment you pay your premium, it is no longer your money. It is the money of the company. So it is winner takes all. So number 6 difference is that, let us look at the standard setting bodies for the conventional and then for the Takaful. For the conventional insurance, the standard setting body is the IAIS, the International Association of Insurance Supervisors. Globally, they are the ones setting standard for conventional insurance, while we also have the local standard setting bodies, right? Like our NICOM in the case of Nigeria, and then of course in other countries they also have their own. But in the Takaful space, standard bodies are not one. We have standard bodies. We have the IOFI. The IOFI is the accounting, is the audit and accounting organization for Islamic financial institutions. They also have the IFB, Islamic Financial Standard Board. These are global standard body where several countries subscribe willingly to them as a member. So the standard they turn out are what respective countries adopt. So Nigeria, as I'm speaking today, Nigeria is a member of the IOFI, Nigeria is a member of the IFSB, and we are using their standard to regulate our operations for Islamic banks, for Islamic insurance, even in the capital markets, because we are a member of this standard body. Then we also have our own local standard setting body, which is NICOM. You cannot operate without your regulator giving you the license. So that is another major difference. Then we also have the number 8 difference is with regards to risk mitigation approach. In the conventional insurance, the moment you come to subscribe for a policy and you pay your premium, immediately the insurance company transfer all the risks to you. So conventional insurance, they transfer risks. But in Takaful, risk is not transferred to the participant. The risk is shared. It's shared among other policy holder with the Takaful operator. Look at how easy it is. Look at how Islam has made life easy. Unlike in conventional insurance, the moment you pay your premium, they transfer the risk to you. And that's why it's usually very difficult when there are perils, when there are catastrophes. They don't just pay you, they will subject you to such a very difficult process. Even though you pay, then they will tell you the money is no longer your money, it is the money of the insurance company. So before they can pay you, they will subject you to a lot of rigors. Number 9 difference is that when you look at the method of managing risks, in the conventional insurance, risks are transferred from an insured to the insurer, but in Takaful, risks are distributed to the whole group of participants and the burden of losses is shared equitably among them. Number 10, with regards to surplus from participant risk fund, in the conventional insurance, whatever premium you pay, including the profits, it all belongs to the insurance company. But in Takaful, the premium you pay, which is the contribution, and then the profit realized from the operation for a year after they have deducted all liabilities, it can be shared depending on the Takaful model being adopted by the Takaful operator. You can see again the good phase of Takaful. It still give you back some of your money. It doesn't say yes because you have not suffered any loss, therefore your money is gone. No, it will still share among all the participants in that pool. It shall give you, depending on the policy that you actually subscribe to. Number 11 difference is with regards to the profit motive. What is the profit motive? In the conventional insurance, commercial insurance companies make profit for their shareholders by protecting the policyholders against risks in return of a fixed premium. Then in Takaful companies make profit for their shareholders by managing and investing the Takaful fund on behalf of the participants who are the policyholders. Takaful coverage against risks is provided by the participants on a mutual or cooperative basis. Number 12 difference is profit from investments. Profit from investment in a conventional insurance belongs to the insurance company 100%. They will share it with you as a policyholder because the moment you pay your premium, it is no longer your money, it is the money of the company. So whatever profit they make, they share it among themselves. But in Takaful, it can be shared between participants and Takaful operators according to the Takaful model adopted. And then the nature of the contract. The contract of commercial insurance is a sale and purchase contract of insurance policy between the insurer and the insurer. In Takaful, it is a contract of ta'awun, which combines the element of musharaka and tabaru. The contract of mu'awwada only relates to the management of Takaful funds. Thank you. Then, another difference there is the obligation of the parties of the contract. In conventional insurance, the policyholder is obliged to pay the premium, while the insurer is obliged to pay the compensation to the policyholder upon the occurrence of losses specified in the policy. But in the case of Takaful, the participant is obliged to pay the contributions as a commitment to provide indemnity to other participants on a mutual basis, while the Takaful operator is obliged to manage and invest the Takaful contribution. And finally, the ownership of insurance Takaful fund. Who owns it? In the conventional insurance, the paid premiums, together with all the investment, profit and underwriting surplus, belong to the insurance company, not you. But in Takaful, the Takaful contributions, the profits from the investment and the surplus belong to the participants completely, collectively. Then also we have receivable upon maturity or receivable upon surrender. These concepts in the conventional insurance, the amount agreed upon the contract, that is dividends and bonus and interest. In the Takaful space, participants share from the investment account and profit, if any, from investments and the maturity value of the participant fund. With respect to receivable upon surrender, the amount agreed upon in the contract, that is the interest and dividend and bonus, goes back to the policy, the premium and the policyholder. But in Takaful, participant share from the investment account and profit, if any, and then the surrender value of the participant risk fund. These are majorly some of the differences between the conventional and the Takaful insurance. I have more than this point I've raised because of time. Let me just quickly go to the next slide, which is to look at some of the conditions governing Takaful operations. Quickly, number one, it must be based on a cooperative principle. Two, the participant insured must have the right to share in any profit and understand that profit may have to be borne or may have to be forgone in order to cover losses to the fund. Thirdly, contributions, benefit expenses, and profit sharing must be clearly defined from the beginning. Fourthly, the investment of funds must avoid all areas considered harmful or forbidden under the Sharia and fall into two categories, namely ethical or ecological products involving animal testing, human rights abuses, the product or armament, the production of armament, nuclear power, and social items such as tobacco, alcohol, pork, gambling, pornography, among other things. And then fifthly, participants have the right to examine the funds transaction, or as an alternative, there shall be supervision by the Sharia board. You see, in the conventional insurance, you as a premium holder, you cannot hold the shareholder to an account because you are not a shareholder, you are a premium holder. But in Takaful, like we said, you are the owner of the contribution you have made. So if you cannot hold them directly accountable, then by proxy, the Sharia board of the company, which oversees the activities and the operation of the Takaful operators, work on your behalf to protect your interests. So they are the ones that can hold the company to account that your activities must be Sharia compliant. Therefore, if you are doing anything that is not Sharia compliant, they will advise them to revise the activities. And then finally, surpluses are to be returned to the policyholders who produce them. While in the conventional insurance, like we've mentioned, the reverse is the case. In conclusion, of course, Takaful companies in Nigeria today, and by extension globally, are facing some number of challenges. In Nigeria in particular, these are some of the challenges we are facing. One, inadequate awareness. Even those of us who are here today for this lecture, I'm sure majority of us don't even know anything about Takaful. Maybe some of us are just hearing it for the first time in our lives. Detail some of us who are online. So there is inadequate awareness. So the Takaful operators themselves are not doing much to create awareness in the public space for people to understand it. Number two, there is a low rate of market penetration. In Nigeria, at the beginning of my lecture, I mentioned that the market size of Takaful in Nigeria is just about 1 to 2% of the total market space. That is grossly unacceptable. Taking our population as a case study, Muslims are in the majority in this country. And Takaful is not just for Muslims alone, it's for everybody. Just like Islamic Bank is not just for Muslims alone, it's for everybody. So the low rate of the market penetration is also not acceptable. It's also another challenge. Number three is the Takaful capacity. Currently, we don't have, companies that are Sharia compliant that can provide Takaful, for Takaful operators. That is why NICOM in their guidelines made a clause that where you cannot find a Sharia compliant Takaful company, you are allowed to go and do Takaful with a conventional Takaful company, provided your ACE, the advisory committee of your experts, approve that for you in order to protect the participant risk fund from not going to a wrong place. Right? So it is a challenge for us. So I use this opportunity again to call upon those that Allah has blessed in this country, that they can invest their money to set up, the Takaful companies, so that we can have as many of the Takaful companies as possible that can always, serve the Takaful operators, rather than forcing the Takaful operators to go and do the Takaful with non-Sharia, compliant with the Takaful company. You are running away from haram. You are not going back to another haram. Right? Even though it comes under Daruriya. You know, one of the legal maxims of Sharia, it says, Ad-Darurat, Tubiul Ma'adurat. What ordinarily is not permissible, Sharia makes it permissible for you when a situation makes it so. Under this particular legal maxim, that is why Nakam says you can do your takaful with a conventional takaful provided your ACE, your Sharia board, gives approval after looking at your record very well. So it's a challenge. The fourth challenge also is lack of political will. Lack of political will on the part of our governments. We know how it took our government to reach where they are. Alhamdulillah, we thank them for providing this window for us to be able to have alternative, and people are seeing the benefits. Most of these Takaful companies I've mentioned, particularly Jai, Nur Takaful, Salam Takaful, you know, they have organized surplus distribution, you know, in the public space where they gave back part of the surplus to the people who had policy with them over the year. Because people are saying, how is it possible to give them back money? Then how do you run your company? How do you make your own profits? It has been practically exemplified. It's the same thing with Islamic Bank. This Islamic Bank, you don't deal with interest. Then how do you make profits? We have seen Islamic banks today are also posting profits, right? So it doesn't mean clearly that we must go the way of interest. The overriding interest here is to make life easy. Yassiru wala tu'assiru. This is what the Prophet says. Make life easy for people. Don't make it difficult for people. Takaful want to make life easy for people, unlike the conventional that wants to take advantage. Winner takes all. Another challenge is limited investment option. This is my message to NICOM. They are our regulators. We know you are trying to protect the participant risk funds, but it is also affecting the Takaful operators because NICOM by its guideline has limited where Takaful operators can make investments. It doesn't give them the room to invest in other high-yielding, investment that can give them good return. It has limited them, and by limiting them, it means the participant may not have higher yields. So it is another challenge. And then finally, we have the challenge of skilled human resources. Very few of us have the capacity to work in Takaful. Most of the people who are working there are people you bring from the conventional insurance, and then you have to train them to know how to apply the principle of Sharia. Then we also have, what we call inadequate technological or technological capacity. Most of these Takaful operators have not yet been able to adopt high level of fintech to drive their operations because of the capital, nature of fintech. It requires a lot of capital, so it is a challenge. And then one of the things I also want to bring before them is that all the Takaful operators, without even my own, where I'm sitting on their board inclusive, this excuse is the challenge of lack of innovation in the business model, for new market space. We are doing the same thing. We are not creative, we are not innovative, we are not going to do something that will challenge the regulators, to put on their thinking cap. The regulators has given you an open check. Give us, whichever area you think you can do that, they bring it. Then we always want to be in our comfort zone. So it's a challenge. We need to create, be innovative in the kind of model we want to use and in the kind of the products and services we are giving out for the people who want to benefit. In conclusion, is the area of minimal effort in research and development. Takaful industry will not grow. I'm not making a course, but I'm just trying to point out a challenge. And one of the ways we can quickly grow the Takaful industry is also to invest in R&D. Invest in R&D, in research and development. We are so blessed that we have the resources, we have the market, and we also have a very enabling environment, and yet our market penetration is between 1% and 2%. That is not a pass mark. That is a significant failure. Why? It's because we don't have R&D. I want all Takaful operators to deliberately establish a department or a unit of R&D in the organization, research and development, put young chaps there who are computer savvy, who are technological driven to come out with things that can grow the Takaful industry and then match us with those in the international market. For me, I believe if we're able to do all this, then we'll be able to grow the Takaful industry to a certain level. أقول قولي هذا وأستغفر الله لي ولكم والسلام عليكم ورحمة الله وبركاته.
Before the question and answer session, the chairman wants to make some remarks. Thank you. Imam Dr. Shu'aib, thank you very much for this catchy and eye lecture. What was so was the area of working hours. But to clearly say that all that I have said, I believe that one fundamental thing is global peace. Particularly change is lack of awareness. And I think it's very fundamental. So I believe that one of the things that I want to do in this lecture and from this side, Islamic education. What can we do towards informing the Muslim about Islamic products in business? I think this is one of the challenges, and I think the center should take up this as well. How can we create awareness in that Islamic business? How can we work and the like? Also, one of the areas indicated as low, very low market penetration. For that, I believe that if there's more awareness, the chances of increasing the market share is going to be there. And then the political will. You have said that, and that's true, although others are contested. There are more Muslims in this country than others. So the issue of political will, I think we should go for more attention. We need more and more Islamic business processes, including the and then you see that limited changes. Well, for me, the moment we have that awareness, the moment we have the different Islamic models, I think the most use. Of course, we look at the process. So that makes us another area that is in terms of education. That's the area that and the last I cannot see. I think these are areas we need to look at, and I hope the center can take on this, and then other organizations can also look at so in order to make this presentation, this is a bit of a summary, just to the issue. One decide now, question and answers. Okay. We have a question. So.
Okay. عليكم السلام ورحمة الله وبركاته.
Where kids highly competitive presentation of the content of its opportunities. And when I'm speaking like all the challenges area, the challenges areas that I like to construct it a little more. all of Islamic announcing that Islamic concept is very it is a whole of Islamic religious organizing and giving preference to killing overwhelming. So my question is in desperation, I know we are not going to tolerate it, which is well placed in the information statement in terms of insurance. How do they have a product or a product for annuity? And yes, what is the mortality? Because I know one of the concepts in annuity is after the year, after which you earn that resources belong to the church. And being on the very state of sharing production, which is how do we take out the account to ensure that the interest of the administrators is protected until after 10 years, and running the process of the administrator is given back to the family after the device.
Thank you very much for that contribution. It's highly appreciated. I have to just be very frank with you and with everybody. As I'm speaking today, the NICOM has not approved annuity in Takaful insurance because the current annuity we have in the conventional insurance is not Sharia compliant. But I also want to give us a glad tidings that the PENCOM body, which is the Sharia, committee of the PENCOM, chaired by my very good friend, Professor Abdullah, they are currently working to see how something very close to that, which is Sharia compliant, can, be brought forward for the regulators' consideration and possibly approval. But currently now, what we normally advise people to do is just go for withdrawal. Because annuity as we have it in the conventional insurance and in pension is not Sharia compliant. That's the summary of my response to you. Thank you. Alaikum salam.
My question is compliance and related competencies. When you talk about financial transactions and competencies of investors, what goes in that. Within business, competence trust in the institution that tries to provide but if that's the case, we're going to change until we get people in. Like you mentioned, penetration rates this month, having that
Jazakallah khairan. That's a very hard question or a point. I must also agree with you that the Takaful operators needs to redouble their efforts and demonstrate practically to the would-be participants that if they patronize them, they do not have any need to be afraid of anything. I do also know that before licenses are issued to Takaful operators, and even before the managers who are going to operationalize them are also approved, there are processes that are very rigorous. The NICOM has criteria, they have standards,
And they also do verification, they also do background check, you know, particularly on the top echelon of the people who are going to drive the institution. So it is not an easy task. And of course, even if somebody is moving from one point to the other to join the organization, you cannot do that until approval has been given by the regulator. All these are good yet, but again, the question you have raised is something that also somebody like me always also feel concerned that when we say we want to practicalize or want to operationalize Sharia compliance, he that comes with equity must come with a very clean hand. So we need to also demonstrate clearly that we can be trusted, and people should not be afraid that something that may slightly bring about trust deficits in a particular Takaful operator or another will happen. So it is important that these points must be taken note by all the Takaful operators and particularly the A's. One of the reasons why the A's are there is to ensure that there are checks and balances. Is to ensure that those who are managers working there are applying the Sharia principles and they are not circumventing the processes of how things are being done. So that at the end of the day, the bottom line is not profit motive like the conventional. Is to do what? Is to bring relief to the people. And it is only when we get to understand this that all these sharp practices that is very rampant in the conventional insurance companies that are gradually creeping into the Takaful space should quickly be stopped. The by and large as of today, I think the Takaful company are still doing very well, all of them. But only the fact that in the area of low awareness, they are not doing enough of creating awareness for people to understand, what the market is all about and the benefits people stands to gain. Alhamdulillah, people have seen some from the bank, from the Islamic bank, even the Islamic bank themselves are not doing enough awareness. Even the awareness level of the Islamic bank themselves is still very, very low because people just believe that they are just the same. That they are not the same, they are different. We need to break this down so that every person, will have no any excuse not to transact business with them. And it is very convenient today. Takaful insurance is very convenient. Or you don't need to be in the bank physically. Through your cell phone, you can do everything you want to do. Just like through your cell phone, you can register with a bank, open an account with a bank. They immediately, you don't even need to be there physically with them. And then you have your account ready to go. You start using it. It's the same thing Takaful. So because all these things, we don't know it and the operators are not even raising the bar to make people to understand it. So people don't even believe. So they are still very comfortable with the conventional one that they are going to, because that is the easiest. And I also want to agree with you, everybody wants convenience. Nobody wants difficulties. But if now the ball is in the court of Takaful operators, to turn the ball against those who are saying you are not making it convenient for us. Until we're able to get to that level, the market penetration may still remain the way it is. And we pray Allah, will make us to understand better and then change the narrative. Thank you.
Waalaikum salam. Waalaikum salam.
Successful lecture. We have discussed about the Takaful the other conference that basically can just briefly talk about Takaful Ijara contract.
Takaful what?
Takaful Ijara.
Like I did mention, there are only 3 models that are approved by NICOM in Nigeria, which all the Takaful operators have adopted. The number 1 is Mudaraba model, number 2 is the Wakala model, number 3 is the Wakala Mudaraba model. All these Takaful companies, the company operators as mentioned, they are using Wakala Mudaraba model, which is the hybrid. So there is no any country or any company in Nigeria today that is using, Ijara, Takaful. Ijara means lease. It means lease. And of course, in terms of Takaful and Ijara, we don't have Takaful Ijara model. We don't have. So what we have is Takaful Wakala, Takaful Mudaraba, or Takaful Wakala Mudaraba. The other one that we have but not approved in this country is Takaful Wakfu model. Takaful Wakfu model. But that one is not approved by NICOM in Nigeria here. In some other part of the world, they are using it. Assalamu alaikum.